It's my pleasure. I'm honored to come here. And obviously when you do this event and you come into IIT, then definitely you feel that you are away from the hustle and bustle of the stock market at least. And for a change, there are a lot of investors in the room. How many of you are checking the tickers on your phone? आप शेयर के भाव देख रहे हैं फोन पे अभी? Yeah, that's what I meant to ask, because when it's basically in the markets, it is known that the farther away from the market you are, you make more money actually. So this is the right place to do these gatherings and these events. But I don't have a formal presentation. What I'm going to do is I'm going to share my thoughts about what is happening in the markets and how we look at investing in equity. So I'll share what I believe in, and I'm not going to talk about any products or any portfolios or anything. And if I give any examples, then they are merely examples. We may not necessarily be owning any of the stocks that I'm using for examples. But just for me to know and just to make sure that I make sense to you, it will help me if I get to know how many of you invest in the equities. So this is all equity mutual funds? Okay, how many of you invest directly in stocks? Everybody? Okay. I think this is because, February the market bottomed out and there is some recovery in the market. If I had asked this question in October last year, most people would have refused to raise the hand or something like that. So since you all are experienced in investing in equity, that at least helps me to understand what to talk and how to make sense to you. So 3 or 4 perspectives that I want to share with you, and then like he said, like Madhu said, like Avneet said, we'll take questions. If you are a investor directly in shares or in equity mutual funds, then I think there are 2 things which are very top of mind for a lot of people in the last year or 2. As part of my role, I get the opportunity to meet a lot of investors, and then I get to know, what they are thinking and what is top of mind for them. So what I picked up in the last couple of years, the most common thing which people have been realizing is that if you saw the Nifty, then till few days back, Nifty was 11,800, 11,900 kind of numbers. And a lot of investors I used to meet, they used to say that, if you see the Nifty, it seems like everything is very good. But if I see my own portfolio, it's not looking that great. So the great boom, the kind of bull run which was there in the Nifty was not being exemplified in people's portfolios. And the second thing which I get very commonly asked, or where there's a lot of observation from friends in the media as well as on social media, and a lot of observation by people personally, that a lot of portfolio managers, whether it may be you yourself as your portfolio manager or any portfolio manager who's providing PMS to you or mutual funds, a lot of these guys have been struggling to beat the index. Have you come across this kind of situation? How many of you are, how many of you feel that you are doing way better than the index in the last couple of years? Right. And you must have observed that a lot of fund managers are not beating the index. So what is the reason behind this? Why I'm picking up on this is because based on these observations of the last year or so, a lot of people are drawing a lot of conclusions. Like one common conclusion which I hear is that since fund managers are finding it difficult to beat the index, I think it's time to go passive. We should all buy the index. That is one conclusion that people make very often. The second conclusion which comes up is that we should buy large caps because in the last couple of years people have lost money in small cap, people have made no money in mid cap, but large cap, what is manifested in the index is that large cap is doing very, very well. So these are the most common questions that I get, or the common refrains that I hear from people. So first on the index, and why most people are not able to beat the index, like what is happening actually. For you to understand that, we need to go back a little bit in time. Like if you see the last bottom or the last time when the market was, took a knock was after demonetization was announced. So that's just over 2 years back. November, December 2016 was that phase. Now, after demonetization was announced, that's when the Nifty really saw its previous low level. And at that time, Nifty was about 7,800 after demon was. Before it was announced, it was nearly 89, 90, 9,000 kind of number. But after demonetization was announced and we were going through the phase of uncertainty, we saw Nifty at about 7,800, 7,700 kind of level. Market has corrected a bit in the month of May, but before the month of May, till recently, the highest point Nifty was about 11,900. So what you should notice or what you should keep in mind is that from the bottom of demonetization till recently, in 2 years and 3 months or whatever it is, the Nifty is up by approximately 50%, right? In the same period, what has happened with small cap index and mid cap index? Any idea? The small cap index actually went up in 2017, and as we speak, these are not accurate numbers because I don't see this every day, but roughly speaking, the small cap index is exactly where it was at that time. It has gone up and come back to exactly where it started. And if you see the mid cap index, of course the mid cap index also went up in 2017, but even the mid cap index has pretty much retraced everything, and it is maybe 10-12% higher than where it was. So the limited point is that in the 2 years after the market hit the previous bottom, in these 2 years and 3-4 months, Nifty is up by 50%, small cap index is back to where it was, and the mid cap index is 10% higher. So in a period when Nifty has given 50% return, small cap return is 0, mid cap is maybe 10% absolute or some such number. Now, obviously the Nifty has gone up 50%, and like I was commenting to you, a lot of portfolio managers, mutual fund guys, maybe some of you yourself have not been able to match with the Nifty. So now let's go back a little bit further. When the rally actually started was somewhere around when Mr. Modi won the election, and 14th May 2014, I think somewhere there this feeling that the market is going to be so May 2014, when the so-called this period of excitement started, the day the election result was announced, Nifty was about 7,400, 7,500. It closed around 7,500. Intraday it was much higher. It closed around 7,500. So May 2014 was 7,500, and March 2015, few months later, it was 8,900. July, September, for most parts of 2015, it was at 8,900, 8,950 kind of level. Then RBI announced the asset quality review, right? China devalued the currency. Commodity prices crashed. I think aluminum fell 60%. Oil prices fell all the way down to $29 to a barrel. Do you know where the index actually bottomed? Where was the index in January 2016? In February 2016, the Nifty was 6,700. Then again it started rising. By September 2016, we were again back to 8950, 8990 kind of level. And then demonetization was announced, and then I told you we came back to 7700. So now just keep these numbers in mind. In the last 2 years, Nifty has given 50% return. We have failed to match it. The 3 years before that, I told you with numbers and dates, the Nifty didn't do anything, right? 7,500, 8,900, 6,700, 8,900, 7,700. In this phase, actually the Nifty didn't do anything. What kind of returns were your portfolios making at that time? What kind of returns did you make? Were you all outperforming the index? I mean, Nifty में तो कुछ नहीं बना, आपका कुछ रिटर्न बना था तभी? Do you remember? Nobody remembers. What was the experience of the previous 3 years? So I'll tell you with factually, because we are the guys who are questioned quite a bit. In those 3 years, most of us were beating the index by 10 to 12% compounded year on year. Every year we were ahead of the index by about 10 to 12%. Whereas in the last 2 years, so what happens when you are actually managing money, whether it is you or us, right? Most people who manage money, they have certain criteria for selecting the stocks that they are selecting. For example, some people might say that I will only own companies with return on equity more than 15%. Some people might say that I want to own companies whose EPS growth is 18-20% year on year. Some people will say I want to buy secular companies and not cyclical companies. Some people might say I am very fussy about leverage ratios. I will not buy companies who have too much debt on their books. Everybody has certain criteria. Now, if you are using any growth criteria, any qualitative criteria in the last 2 to 3 years, the chances are that you will end up owning a bunch of companies which are not necessarily the top 5-10 companies of the Nifty. Not necessary at all, right? And what has happened in, let's say for example, in 2018, you take the whole market. The market cap on an aggregate basis, Bombay Stock Exchange, if you take, in 2018 on an aggregate basis, the whole market cap was down by about 10 to 11%. But if you strip off the top 10 companies, for the top 10 companies, the market cap was up by 23%. So what is the difference? The full market is down 10%, top 10 companies are up 23%, so the rest of the thousands of companies are actually down more than 20%. And to compound your challenges, if you actually use any growth or quality retail related criteria for your stock picking, the chances are that you will not end up owning the 10 companies which went up. You will end up owning, because it's a well-known fact that for short frames of time, the prices have nothing to do with fundamentals, right? There can be these kind of volatility. Also keep in mind that if you're a stock picker, then there will be phases in the market where exactly what enabled you to beat the market, that same thing can turn around and make you underperform the market. The reason is that there is a very important statement that if you buy the market, you cannot beat the market, right? So people like us, we are paid to stick our neck out and take certain positions or make certain portfolios which we think will create wealth over a period of time. And we believe that if you manage money to beat the index, there is no guarantee you will beat the index. But if you manage money to create wealth, then as a byproduct you might end up, very high chances you will end up beating the index itself. So if you are qualitative, growth oriented, there is a good chance that in the last couple of years you may have underperformed. And the reason for that is because in the previous 3 to 4 years you may have outperformed very, very dramatically. Now just I'll give you one more example. I have spoken about the top 10 stocks and the Nifty. I'll tell you something which is even more staggering. I quoted something about the bottom of demonetization, and from that phase, the largest stock is Reliance Industries, which is 9.7% of the index. From 2016 till now, it's up 3x. It's 3 times up. So what you have in your portfolio or not comes secondary. If the top stock is up 3x, then obviously it will create a lag in your portfolios. So anybody who's a stock picker, anybody who's a mutual fund investor, anybody who's a PMS investor or a manager, what you need to keep in mind is that there will be phases in the market where something you do to produce the outperformance, there will be phases when some of that outperformance is pulled back by the market. So this is something which is part of investing. Now, why not to draw conclusions based on what happened in the last 1 year or whatever? Like a lot of you must be driving a car, and you must have seen that, cars have wipers, of course, which we put into service when it starts raining. Have you observed what happens with the movement? If you, let's say the water is, it's raining, let's say the water falls. So the wiper, let's say, cleans the water here. Obviously, when it cleans here, the water will fall this side, so it will move back. But then, of course, it's rain, it will fall here, so it will move back, right? So that's why it keeps cleaning, but the water keeps falling on either side. So it keeps going back and forth. Now, that's not the way to manage money, actually. That's not how you manage portfolio. It's good for the wiper to do that thing. But what happens in the markets, what I've seen with investors is that because 2015, 16, and maybe even 17 actually, because 2014, 15, 16, 17, mid-caps did very, very well. So you buy into mid-caps. Then you see what happened in 2018. Now in 2018, large caps did very, very well. So this year, if you buy large caps, what do you think will happen next year? Now, 2009, there was a completely different government who was fighting the election. And you may be having emotion, the market has no emotion. So by that time, market fell in love with that government also. And when that government got re-elected, the market went up 10% in 2009. So in 2009, when the election was, the result was announced, market was plus 10%. Now, after seeing that, what would you imagine? What is the expectation of the market from the new government? It's like a thumbs up, right? Very good. What happened from 2009 to 2013 actually? In 2014, there was a popular government which won the election. And I don't need to repeat because I just explained to you that till 2017 we were at the same place, right? So what I'm saying is that these are things, if you are going to predict this accurately, you will feel very nice and you will be right for exactly 15 days. Because afterwards, how it will behave, there's actually no correlation. And if you are insisting on drawing a correlation, let me tell you, the correlation is with the previous government, not with the current or next. Because whatever is done, it takes 2, 3, 4, 5 years to actually show the effects. For example, somebody, I was not participating, I was listening to a presentation where somebody said that GST is implemented, so some sectors are getting more and more organized, and they were presenting some investment case. So somebody in the audience told them that GST was launched in 2017, why are you making this presentation now? So obviously it takes many years for the effects to show, right? Till recently people were wondering why paint companies have 30% higher volume growth. Can you actually pinpoint a specific cause? Answer is no. But in 2025, when some smart guy makes a chart of paint companies, he might just point out a red circle in December 2018 and say this was an inflection point. Then you will believe. But right now we don't know. In future somebody will make a chart and put a red circle, then you might believe that, yeah, actually this is where it happened. So anything that any dispensation does, it produces results or lack of it after 3, 4, 5 years. So don't fret and sweat so much about what happens on the day of the... It's important, it causes volatility. But if you're right for 15, 20 days. If you're wrong for 15, 20 days. That's the limited point. And the last thing, what I've seen is that, before we get into questions, right? How much time do I have? Yeah. Now the last thing, this is a bit sensitive. I'm not giving any recommendations, but I'm just going to use an example to illustrate to you that how sometimes the market actually thinks and why you should not act on your portfolios depending on what someone somewhere is saying. Now, last year a very famous company got listed. Again, we don't own the stock. Okay, this is purely an example. Last year there was a very famous company got listed, which has the brand name D-Mart. Right? It's Avenue Supermarts. Why I'm taking this example is because when the company got listed, and all of what I'm saying, if you let us say surf Economic Times or ET Wealth, all of what I'm saying you will actually find public references. Okay, I'm not saying anything proprietary. I read papers and I follow the current affairs just like you. But yeah, I have some perspective which I'm sharing with you. I'm not going to share with you anything which if I say it, you will be able to relate. Ye kya bol raha hai, maine suna hai. So since the time it got listed, it was perceived to be expensive. ऐसा आपने पढ़ा होगा कि इसका दाम बहुत ज़्यादा है, 100 times PE है, ये सब चीज़ें आपने पढ़ी होंगी ऐसे. And lot of analysts write a lot of reports and publish them every day. Not every analyst report gets covered in, say, Economic Times, for example, right? So there was one analyst who wrote a report on this company, and he also wrote that, okay, it's expensive and all. But then he made a projection till 2027. He projected the growth of the company till 2027, and he said that, this can be a wealth creator, something to the effect, not exactly the same words. He said something to the effect that this can create wealth in 2027. Do you know what happened? What was the response to that report? Sorry? Okay, price actually fell, so you're right. In the last 1 year, I think the price is down. But when you see a report, when the whole market sees a report which says that 2027 tak bahut paisa banega, what reaction do you expect? What do you think people would have reacted? The general reaction was था कि ये लोग पागल है, तेजी है तो कुछ भी लिखते हैं. 2027. What nonsense, Why? I mean, what do you mean 2027? Have you come across this? It was criticized, and it was significantly criticized, by the way. Now, when you see your Facebook and WhatsApp and email and all, what is the folklore about investing in the stock market? What is the most common stories that you receive? That if you invested 10,000 rupees in Wipro in 1980, what would the value be today? Some 600 crore. I mean, there are some people who are very diligent. Somebody might be actually updating the numbers every quarter and forwarding and all also. That's the folklore of the market, right? Everybody shares it. Or, things like if you had bought Infosys in the IPO, then, something like that. I actually think a lot of times I should go back home and ask my mom and dad that, in 1980, 10,000 nahi tha kya aapke paas? What are you talking about? But they'll say there was no economic times, there was no, we didn't know. Wipro was making vegetable oil, so we don't know. They'll give some answers, they all are right answers. No point in arguing, right? But that's not the point. Then I think that, 20 years later, if my kid asks me, कि तुम तो भाषण देते फिर रहे थे, तुमने क्या किया? So you have to also think about it, by the way. Because today I have told you something. You have to answer after a few years. But anyway, coming back to the main point. So what happens is that this guy actually had the daring in 2018 to write a report projecting some company's earnings in 2027. You all have studied physics? There is direction and magnitude. What do you think in market the price is for, magnitude or direction? How many people get the magnitude right? Yeah, the direction is more than enough. There is no special prize for getting the magnitude, by the way. If you didn't know this, then please make a note of that. Nobody is 100% accurate ever. It is not possible because companies are run by human beings. My company is also listed, right? So I know the companies are run by human beings. Nobody gets the magnitude accurate because जो कंपनी चला रहा है उसको नहीं पता है तो आप तो एनालिस्ट हो, आपको कैसे पता होगा, राइट? सो नाउ दिस गाय रोट दैट 2027 में ऐसा ऐसा हो जाएगा. अब 1995 में अगर कोई HDFC बैंक पे ऐसा रिपोर्ट लिखता तो उसको भी लोग जूते मारते ना, क्या कुछ भी लिख रहा है. बट 2005 में एक्चुअली क्या होता? What would have happened actually in 2005? So it's quite possible that all the people who are criticizing will have to eat their words after 10 years. I don't know. We don't own the stock. I'm repeating the 10th time. I'm only giving you example because it's very rarely that such things are publicly covered and people can kind of relate with it. Now, what was wrong with that report? Can you tell me that? I have given you certain reasons why people thought it was rubbish, and I have given you certain reasons why it was not all that wrong. But what was specifically the disconnect between somebody writing such a report and a lot of people criticizing that person? What is the actual disconnect according to you? Too far out. So I'll kind of, I'll try to express it better. Basically, how dare you write a 10-year report and send it out in a market where people can't think beyond next quarter or next year? Correct? Now I'll give you an example of this next year business. See, today what is the biggest complaint in the market? अगर कोई किसी को बोलेगा ना इक्विटी में पैसा इन्वेस्ट करना चाहिए, सबसे बड़ा प्रॉब्लम क्या है? क्या बात कर रहे हो? It's so expensive. Nifty PE is 29 times. Now, first of all, Nifty PE is 29 times is published every day. And in the market, there is no price for stating what is already known. Because market is efficient, right? In fact, people know more than what you and me also know. So it's already there in the price. It is discounted. So sometimes what people think that, these people are idiots, man. The Nifty is 29 times and still they are investing. Everybody knows it's 29 times. But what is the arithmetic behind it? If the Nifty is quoting 29 PE, it means that on an average, a company whose EPS is 10 rupees, earnings per share is 10 rupees, on an average, you would assume by seeing Nifty that the price should be 290. Means he thinks, forget liquidity, but basically he thinks that at 290 he should encash and get out. But at 290 somebody is buying also. What do you think he thinks? Okay, let me ask you, who is right and who is wrong? Both are right. So this, अभी क्या है कि इधर एयर कंडीशनर चल रहा है, सब ठंडा है, तो आप अच्छे जवाब दे रहे हो. अगर आप स्क्रीन के सामने बैठे होते ना, तो आप ऐसा जवाब दे ही नहीं सकते कि both are right. This is, see, it's a very, very mature response. And it's a fact. In the market, nobody is wrong. See, what is the biggest mistake which investors make, do you know? They are looking for conclusions. They are looking for right and wrong. ऐसा होता नहीं है. There are only perspectives. There are no rights and wrongs in the stock market. It's only perspective. There are some people who are still buying Jet Airways share, right? They're buying. Can you conclusively tell me they are wrong? थोड़े दिन पहले तो लोग बोल रहे थे स्पाइस जेट का शेयर लेना भी गलत है. बोल रहे थे कि नहीं 10-12 रुपये. आई डोंट रिमेंबर व्हाट इट वाज. वो सब गलत थे क्या? उस दिन शायद गलत होंगे, बट 2 साल के बाद क्या हुआ? So anyway, I'm not giving you any, I mean, forget, we don't own these 2 stocks also, by the way. They are only examples. So the point is that don't look for rights and wrongs and don't look to draw conclusions, because everything is matter of perspective. Now go back to the example. A guy who's selling 10 rupee EPS, he's selling at 290. So he might be thinking, पता नहीं इलेक्शन में क्या होगा, इस बार बारिश भी नहीं होगी, तो ये जो 10 रुपये EPS है, ये पिछले 3 साल से तो ग्रो नहीं हो रहा है, ये अगले 3 साल मुश्किल से 5% ग्रो करेगा, और 3 साल के तो आगे तो मुझे दिख भी नहीं रहा कुछ. सो ही इज सेलिंग एट 290. नाउ द बायर, यू नो व्हाट ही थिंक्स, द इकोनॉमी इज बॉटम्ड आउट, US is not even raising rates, India is actually cutting rates, I think the election will go XYZ ABC, and he thinks that yes, this 10 rupee may not have grown, but I think it will grow at 15% year on year for the next 3 years, and in fact in the foreseeable future it may continue to grow for another 10%. So what is expensive for the guy who's selling, for the guy who's buying, it seems to be attractive. And both are not wrong. The only thing is both have different perspectives. But the moot point why I'm telling you this story is, what does the market pay for? Why is this 290 out there? What is it paying for? In the example you must have gathered, the market pays for 3 things. One thing the market pays for, if my hypothesis of growth prospects is higher or superior than yours, then I might find it attractive even if you find it expensive. Second and most important, if my perspective or period of holding is longer than yours, then I am more likely to capture more of the growth. So I might find it attractive even when you are actually finding it. And the third is the least understood. If I expect the growth to be low volatility, if I expect that the growth will not fluctuate too much, but you attribute a lot of uncertainty and you attribute a lot of fluctuations to the growth, then whatever you find expensive, I might find it actually cheap, right? So market pays for how much growth will come, how long will it actually sustain, and in the journey, how bumpy will be the ride. So this is what equity investing is for, and this is what people call these things value and growth at reasonable price and all these things. That's for us to classify. The market doesn't know that you are calling this stock as growth or value, and the market is not here you will surprise yourself. Market is not here to surprise you. Like a lot of times analysts will release an expectation and say it is below estimate. It has disappointed your estimate, nobody else's estimate. Whose estimate are you talking about, right? So the thing is that market pays for how much earnings, how long will it sustain, and how bumpy will be the ride. So the obvious thing is that people who stay longer and who are owning a bunch of mutual funds or companies which is not junk, they will stand to make more money. Why? Because simply put, arithmetically, you will capture more number of years of growth, right? So that's the kind of limited background or perspective I wanted to share with you. Why I mentioned the perspective is because a lot of times people make decisions by listening to somebody who's saying something whose perspective is next quarter or next year. And I don't think you all are, if you're trading, it's a different art and a different science altogether. There are no rights or wrong, I already mentioned that. But never make your conclusions or your decisions by listening to someone whose perspective is totally different. And I'm not talking about owning junk. I'm generally talking about the logic which applies to the Nifty or the market or to good companies in general. Thank you for listening me out.